let's talk about hedge funds. So the fundamental trend from fundamental hedge funds and quant hedge funds, how is that evolving?
Sure. So I think kind of a revolution in the hedge fund industry, mainly because you have the quantitative hedge funds that have really been the leaders in technology and data. And now you have the fundamentals really over the last, call it 2-3 years, thinking about how do we transform our business? How do we take advantage of all this data that's out there? How do we use data science, which is kind of a catch-all to better make investment decisions, but start to think like the disruptors that are out there that we're investing in.
Mm-hmm. And fundamental is like this whole concept of master of the world, where people that just think big thoughts and say, well, this is going to happen and make bets, right? And quant is super data-driven, much more sort of technical. Is that the right way to think about it?
Yeah, I mean, I think in the fundamental world, what you have more is you're diving much more into the financial statements. What is management talking about? Really understanding deeply about single name companies, whereas in the quantitative world, obviously everything's about numbers. You don't really care in the morning when you come in about specific companies. You're looking at trading thousands of companies at a time. So it's interesting because when you move from quantitative to fundamental, the amount of data that's relevant is, enormous on the fundamental side, because you're really diving into these single names. You want to understand a company like Starbucks as deeply as they understand themselves.
So what does someone like you, and you specifically, do? And maybe tell us about your background and your hedge fund.
Sure. So I started at Third Point as the chief data scientist about a little over 2 years ago. Prior to that, I spent about 6 years at a quantitative hedge fund called World Quant. So with Third Point, it was very interesting. Our founder, he saw the changes that were happening in the industry and said, we need to start a data science effort. We don't do centralized data ingestion. We don't really use technology and innovation on the investment team. If we do, we kind of outsource here and there, but we don't have a dedicated focus to that. So the idea was, come in, here's a desk, we need to hire, we need to build, and we have to essentially create a startup within this firm to kind of transform us so 5 years down the line, we don't get disrupted as well.
Which is fascinating, right? Because it's sort of the same dynamic as a lot of just regular enterprises, right, that bring in data-driven approach. So it's interesting that it applies to the hedge fund industry as well. And so how does that work? So you maybe help us understand what does a machine do and what do you do? Does something come out of the machine and then you or somebody on your team brings it to the PM for an investment decision, or is that more automated?
Yeah, I mean, I think this is the big question of how do you integrate data science within a fundamental investment firm? The culture and how do you actually use these tools that give us more intelligence now we're making investment decisions. So a lot of it is how do we automate what a traditional investment analyst is currently doing, make their lives more efficient, but then also how do we incorporate all of these unique data sets to give them a better understanding of the opportunity, maybe argue for or against the thesis they already have. If you're taking a deep dive into a consumer name, you probably want to understand the transaction data or the location of people walking into those stores. But how do you take all of that as just another addition to what they're looking at? I think the unique thing for us is we have a very small, concentrated portfolio, so we get to really dive into specific companies, really going back and forth with the analysts on, is this a good opportunity? Is it now the good opportunity, or can we track this and use technology to keep track of things and have those ideas kind of populate back up to us?
And the firm you came from before Third Point, World Quant, is much more on the sort of pure quant side, right? Is that correct?
Sure. So World Quant was fully systematic, which was more of a thesis of if we consume more data than anybody else in the world, we can find more signals, create more alpha. I think on where we sit now, or where I sit now with Third Point, our team is thinking there's all this data out there and there's so much noise. We have to decide where do we spend our time and what can help us better understand the names we have. And rather than mining data for new ideas, we're almost looking for data to help us understand the ideas we may already have, or to create very sophisticated screens, looking across all these companies to kind of dwindle down a smaller list of names that we can work on with a fundamental manager.
Mm-hmm. And in a firm like World Quant or like any comparable firm, the same question on automation, is that fully automated? Like do people just like go on vacation for a week and that keeps trading and they come back and look at the beautiful results?
Yeah, so I mean, at a fully systematic firm, things are running. People are there maybe watching the machines, The more automated it is, the easier it is to walk away. I think in the early years when I was there was more watching the machines towards, later on when you have more people and more processes and, different things in place, it's easier to, take the entire team to another country for a meeting.
Fascinating. All right, so there's one topic that's related to all of this that people have talked about a lot, and that's also very relevant to the startup world, which is this concept of alternative data. Do you want to maybe define what it is?
Yeah, I think now alternative data is just becoming any data that's really not financial or fundamental data. People are starting to use all different types of data, and it's, at first it's alternative if you're not used to it or you've never used it before, but I think we're moving towards a world where there's just more information that we're trying to incorporate.
So maybe some examples of alternative data is like satellite data. It's what?
Yeah, I think if you read the newspapers, it's satellite data, it's GPS on people's phones. Credit card data is always very popular.
Mm-hmm. And so what does one do with this data? Like how do you know if it's going to be helpful or predictive, or do you just acquire a bunch and run experiments? How does that work?
So for us, I think our approach is more of what type of information can make us better understand a company. So if we're looking at a specific company, I think we try and think, if we were a data science team within that firm, what information would we have internally to understand better how our sales are looking for the quarter, right? Because there's a lot of information that comes out quarterly for these companies. We're trying to better understand for different line items, maybe different regions, different products they sell, how are they performing? So it could be credit card data, and does the panel really represent that company? And is it clean, and how has it looked over time? And is it, from a basic correlation to what is it predicting going forward, and really understanding maybe the industry they're in. And then maybe we'll tie that with macroeconomic data. What's the imports and exports looking like?
Mm-hmm. Is that basically a big arms race, right? Because presumably you use credit card data one day, but if everybody uses credit card data, then your edge just disappears. Is that the right way to think about it?
Yeah, I think it brings more volatility into events, earnings, especially for firms that are trading around these events, where everybody's looking at the same credit card data, and a lot of it is there's third parties that are creating analytics that are maybe more affordable, but they're all using the same underlying data. So it almost becomes that you have to have that information just to understand what everybody else is doing. If the data comes out 2 weeks before earnings, the stocks are moving a lot, but everybody knows it's because of this data. You may not have an opinion about that company, but you understand why things are actually changing. So I think it brings different opportunities. I think also, using this data is very different from a quant fund who's placing lots of trades, both long and short at the same time. Whereas an activist or long-term investor might look at this as just another input into their longer investment approach.
Mm. Are there some examples of data that just didn't work? You had big hopes, or you or friends of yours in the industry had big hopes for, and that turned out to be super not interesting?
I think we all hear about the satellite data, and it's interesting maybe for specific use cases, but I don't think that there's a lot of firms really counting cars in parking lots. And that's what's really making their decision making. Right? I think a lot of these data sets, we really need to think about how do we combine them. And that's where we spend a lot of time is, you have all these different types of data. How do you connect them to each other? If we have information about, where people are, what they're spending, what the demographic is, how does that map back to the type of company we're looking at? That's probably much more exciting than, there's 50 cars in the parking lot today, but tomorrow there's a cloud and they couldn't count.
Mm-hmm. And you hear especially for somebody like me in venture capital, when I speak to a lot of startups, and especially over the last 2 to 3 years, there's been this growing excitement to the point of maybe sounds borderline mythical about, hey, we don't really have a business model, but we build this fantastic data asset, and some hedge fund is going to turn around and buy it for $10 million a year, which initially made me smile, and still makes me smile a supportive smile. But at the same time, I actually have heard cases where that is true. So what's is that just a 1 in 1,000 or million type occurrences? How should startups think about selling data to hedge funds?
Yeah, I mean, I think the multi-million-dollar data sales was maybe something that you saw 3, 4, or 5 years ago. I think now that people are understanding what data is actually worth, they're maybe not trying to get exclusive access to just one data set because they know it's just a bigger part of a mosaic. Things are changing. I think now you have data hunters or people that are really just focused on buying data. So it's becoming more transparent on what vendors are out there. We're not needing consultants to help us find the next credit card transaction data set. I think selling to hedge funds, most hedge funds in this day and age are very open to seeing what's out there, understanding what the offer is. But I think you have to have something unique with a lot of history. I think there's a lot of support because hedge funds are making investment decisions off of this. So if it's not coming in every day, or if there's the data changes and there's all these issues, the more that we have to work to make it kind of help us, the less we're going to really pay.
Yeah. And what's a lot of history? Is that 1 year worth of data, 5 years worth of data?
I would say that anything less than 2 years of daily data is really tough for most hedge funds to really wrap their head around. I mean, you want to look at year-over-year trends. You want to know what happened at Christmas this year versus Christmas last year. You really want to be able to see that over time. I think a fundamental firm can maybe have less data. It could be very specific to the company they're interested in, so they're willing to maybe spend a little bit more or focus more on less history. But if you're going to sell to a quantitative hedge fund, anything less than 2 years of daily data that's really been stored, point in time that you can really backtest is really going to be tough to make that $10 million sale.
And in my experience of working with startups that did sell to data to hedge funds, one additional obstacle is that you have literally no idea how the hedge fund uses the data, so which makes it very hard to then go to the next hedge fund and try to do the same sale, because obviously the hedge fund industry is notoriously secretive. Is that what you see as well? I mean, you basically ingest raw data dumps and say thank you?
I mean, I think that's changing. I think in the quantitative hedge fund world, you'll have the top 10 players that you're not going to get any feedback from, but at the same time, they're going to be a client and not really complain unless the data just doesn't show up on time. So it's almost an easy, you've sold it, make sure it's being delivered, and you can move on. I think on the fundamental side, especially where you have dedicated data teams that are looking at things or analyzing it, there's a lot of back and forth discussion. You're going to get a lot of feedback, and I would say the better data teams at hedge funds are really helping these companies build products. Because a lot of times getting the raw data is fine, but if we're going to have to do all of this work and you have a team and you really want to make the sale, we'd be happy to help you, learn how to build products that'll make our life easier.
And last question on this concept of selling to a hedge fund. Is there a compliance aspect to this, a legal aspect to this around insider trading, like with data provenance?
Sure. So I think definitely over the last few years, it's become more and more of a topic and more of what our day job is there's due diligence questionnaires, there's legal processes. If it's a software or some sort of platform that we're going to be using that we're putting our information in, it's just going to be more and more compliance and security checks. I think that a lot of firms are getting good at having a set amount of paperwork. You fill this out, we have our calls, and we can move forward. But it's not a put your credit card in and buy the data set.
Great. So maybe switching side, from away from data and more into the algorithms themselves. How much machine learning and AI is actually used with all of this data?
I think on the quantitative side, it's probably more prevalent just because you can systematically trade and not really understand what the algorithms are doing. I think on the fundamental side, we have the explainability factor. So if we come up with a great model and our team shows that it's made X amount of returns over the years, they want to understand what is it actually doing, and can you actually explain what factors it's actually picking. So I think it becomes a little bit more difficult, and you have to think of ways of how do you maybe deliver information or a list of names that they should go look at based off of the machines, and then there's a layer of due diligence.
Interesting. And I guess how do you know whether machine learning works? How long does it take for any of those sort of quant techniques to prove their efficacy?
I mean, I think it's a lot like how we test a lot of the data sets we have. you really want to see it run out of sample arguably for a year. Obviously, you can slice the data so you can do different training periods. But I think you truly want to understand if it's not point-in-time data where you don't have that timestamp to understand when you could have actually executed that trade, or to make sure that they didn't overwrite the historical data. You really want to see a few quarters of how it actually performs before you tell management that you really want to put money behind just an algorithm.
Mm. And outside of machine learning, then if machine learning and AI is not as used as much as it may sound, so what other techniques are used? Is that more like standard stuff?
Yeah, I think everybody's experimenting with machine learning and AI, and I think every vendor that sells us data says they're using machine learning, AI, deep learning to create this beautiful data set or this signal for us to use, and we're always open to testing it. But I think we run into, can we trust it, and is it explainable? So I think going back to the very basics, you kind of find that like the simpler it is, the better it actually performs over time, if you're not trading at this higher frequency.
And are you a believer? I mean, there seems to be, the same trend as we see in startups, which is like suddenly everybody just became an AI and machine learning startup, right? And from the little I know about the hedge fund world, it seems like everybody now is like at least raising money on the basis of AI and machine learning. So, are you a believer that ultimately that creates like a different type of success in hedge fund, or is that more of a marketing and fundraising type positioning?
I think it's in the hedge fund world, you need people to be pushing the innovation because, it's been an industry that historically outside of the quantitative space hasn't really embraced new technologies and, leveraging alternative data. I think that it's bringing smarter people into the industry, which is a good thing. And how we utilize it and what it does for our investors, it doesn't have to be just using AI and machine learning and, cutting edge NLP for systematic investing. It can be to cut through all of the noise and then deliver something that our fundamental investors could then go talk to management about and like be more intelligent when they're having conversations.
Yeah, to the point of like bringing different people into the industry, like that must be very different. I guess maybe you don't know because you're one of these people that were brought into the industry, but especially in the fundamental shop, right? Isn't like a big culture clash, right? You used to be like trading was a Wolf of Wall Street type thing, and then suddenly like the nerds like us just like started coming in. What's the culture like?
I think the culture is the biggest hurdle that all these funds face. You have to have from the top down an embrace of using technology and data, but also do you have the right people? We may not need the smartest PhD within a fundamental shop because we have to be able to explain and understand what they're doing and really talk their language. Whereas at a quantitative hedge fund, there's more opportunity to maybe work on your own and not have to sell the idea and explain it to somebody who has no scientific background.
Mm-hmm. So where is all of this going, right? I mean, it's, from a startup perspective or an industry perspective, AI, everybody can benefit from AI, and then everybody can win, in an ideal world. In the hedge fund world, in the trading world, it's very much a zero-sum game, right? To win, somebody has to lose. What happens as everybody gets alternative data and machine learning and experience with different things? I mean, is that you just continue the arms race?
Yeah, I think it's like every other industry, there'll be new players and there'll be people that evolve over time. Some will go away and some will show up. I think it's interesting that you can build a data science or a hedge fund now leveraging all this technology built in the cloud, which before I started at Third Point, the cloud wasn't the first thing that we would think about. But you can get a team up and running. We're 6 people and quickly be able to deliver things. So it makes it very interesting that we can actually do things at scale and speed now without having to have hundreds of people like some of the larger firms.
Mm-hmm. And do you think at the financial services industry level, this percolates down from hedge funds into mutual funds and other types of investing, this general like more quantitative, more data-driven, machine learning-driven approach?
Yeah, I think that data in general is just becoming more prevalent and available. And I think that long onlys, just how money is managed, you have more information. So, in the early years, people used expert networks to really understand a healthcare company or a technology company. Now you can buy data to kind of give you that insight, and data is becoming more and more available from so many different vendors that it's not just one monopoly that has it. So I think as the hedge funds are maybe the first movers, it kind of moves all the way down. And the exciting thing is to see who are the new data vendors that are going to come out.
And is there the same type of concern in the financial services industry as there is in other industries where basically AI is going to take away jobs? So like if you're a mutual fund person and you've been doing things a certain way, like is the machine going to take your job?
I mean, I think that is a worry in all industries, and it's a constant topic. But I think some of the more sophisticated strategies where you really have to understand the nuances, and maybe it's structured products, maybe it's structured credit. We're doing things where companies are being split apart and they're selling different pieces. I think that's harder and harder for AI to really be involved in, but I think you'll use those type of technologies to better find companies to invest in. And it'll just be a toolkit that will enhance the industry overall.
Mm-hmm. Are you a believer, like I don't know if you've had those conversations, but a believer in applying this to venture capital as well, private companies, and does that work, or you just don't have enough data?
So we do venture investing. We also do investing in credit, which is a lot of private companies, and just like we look at spending at a Starbucks, we could look at private companies that maybe have a lot of retail locations and really understanding that. So we definitely do it across different industries or in different asset classes. I would say on the venture side, we haven't spent as much time, but we're a small team that's only been around for about 2 years. So we got to pick and choose our battles.
And taking another step back from all of this, are you worried about what the industry looks like when it's all, it's not just the jobs, but when it's all like computer-driven, machine-driven? I guess one issue that became very apparent last year was the flash crash of, I guess, just a year ago, February 2018, was once the machines start trading with the machines, then if something goes wrong, the whole thing can unravel pretty quickly. Is that a real concern? Is that overblown?
I mean, I think it's a concern. I think it's understanding the market structure and what's actually happening, how much is driven by machines versus how much is, the idiosyncratic part of a company that's trading, and, it's kind of tied to them. I think as much as it's a concern, it's not something that I think we won't learn from, and the industry will just evolve. All
right, optimistic then.
Yeah.
All right, very good. I guess one last question from me. I'm going to open up to you guys. What do you think you're doing in 3 years from now? What problem are you going to be working on? Is that reactive based on what happens between now and then, or any thoughts about where all of this is going?
I mean, I think we'll always be reactive to event-driven opportunities, but I think as a team, it's how do we incorporate and leverage all of this rich and unique data that's out there and kind of bring it into one real centralized place? So to really understand companies and coming from thousands of different data sets so that we can, have an opinion about a company as soon as somebody asks.
All right, very good. One question here.
Have you heard of this company called Numerai and the open source nature of how data scientists can anonymously, in a decentralized way, send compliant data for crowdsourcing of ideas and eventually creating that? Where does that shape this industry with alternative data, as well as, because that's almost killing the value produced by the data gatherer or the data acquirer, and how do you eventually tackle that, and where do you see the trends coming for that, and do you apply that third point?
Definitely have heard of it. I think it's probably more relevant in the quantitative space, right? You create an algorithm against encrypted data, and then that can be deployed. I think, in third point, it's probably not as relevant just because we're trying to understand the company and use that data to, do a deeper dive. And we're not going to just make a trade based off of what the algorithm tells us.
Thanks. Matt, I was wondering if you could comment on sources of, official sources of data. So in the wake of the shutdown, USDA and Commerce, among others, didn't report official numbers. So, there's been a sort of rise of synthetic sources like GDP, unemployment can be simulated roughly by ADP's numbers among lots of other folks.
is there an expectation that if official sources don't report, that some of these synthetic sources are kind of replace these official sources in their wake, and does that increase volatility when eventually start re-reporting, or just your general thoughts on that? The question's kind of clear.
Yeah, I mean, I think a lot of firms are looking at sources that kind of give them more up-to-date numbers in those different macroeconomic releases, and I think there's other countries that are experimenting, leveraging some of this data. I believe it's being done in Japan. So I think it just becomes, now maybe it's only a few people that are leveraging it, and it's alpha, and eventually it becomes something that everybody has access to.
Thanks, Matt. You both mentioned culture, and I'm curious how you hire when you're growing your team. Do you look at, let's say, bringing folks who have Wall Street experience and bringing them up to speed on the data science side, or do you say, hey, I can take a data scientist and teach them basically the black magic of hedge funds?
Yeah, I mean, I think for us, it's been a lot about the fit within the team. Wall Street experience or financial experience is important, but I think, two of our early hires both came from FactSet, one came from FirstMark, so they're really data vendor experience, so they understand the markets, but they also understand the value of data. They've probably had to explain it to hedge fund professionals or the sell side and really articulate how to use it. So it's now just flipping that mindset to you're working now within the hedge fund, so all of our ideas are for the people inside.
Do you see any differences in the different types of investors and their adoption of data, whether it's long only versus the hedge funds or maybe deep sector expertise versus broader portfolios?
Yeah, I mean, I think obviously at the beginning it was definitely all quantitative hedge funds that were consuming as much data as possible. I think now if you go to some of these conferences like Battlefin, where you can have hundreds of data meetings in one day, you have a whole range of not only just the long onlys and the long shorts and private equity, but you have long onlys and mutual funds.
I'm curious, you mentioned quantitative hedge funds having been on both sides of the aisle, fundamental fund and also quantitative fund. Thank you. Quantitative funds are more oriented around getting a bunch of data, mining it for signals, and then making trades based on those signals. Whereas fundamental guys are more focused, like you said, on single companies in specific situations. I wonder if you've had any success over time at an activist fund utilizing these data sources to inform your activist investments. In other words, something as simple as a sum of the parts type thing where you're splitting a company up into three pieces is pretty simple. It's just arithmetic most of the time. But some of these campaigns can be more complicated where a company is earning less than it should be or could be because they have the wrong strategy. They're pricing their products incorrectly. Maybe it's their menu is wrong at a restaurant or something. Have you been able to use data to go in and convince a management team that what they're doing is wrong and they should be doing it differently?
I mean, I think that's the idea behind how do you leverage data within a fundamental firm, especially one that focuses on governance or helping companies not understand their opportunities, whether it's pricing different products, whether it's they're not selling in the right regions, how do they better compete with their peers? That's obviously the ultimate goal of having a data science team within the fundamental side. Huh? It's done well.
Question about explainability. I think you've used the term that different ways, explainability to potential investors, to auditors, but also in terms of machine learning. If I could ask about machine learning explainability, what does that mean to you? Do you mean just creating a shadow model and generating most relevant features using tree Shapley lines and all that? What does explainability mean to you?
I mean, I think we've definitely experimented with a lot of things. Lime, like you just brought up. I think for us, it's when the model creates a list of companies for us that we should go invest in, we need to be then able to explain to our PMs and analysts internally what's driving that decision, and they really want to get into the deep roots of why it's picking those companies, how have they performed over time. And for us, just throwing things that aren't explainable at them and not being able to really dumb it down into what are the core fundamentals it's picking, why did it pick that, how did they react with each other, is kind of what we spend a lot of time thinking about.
All right. One more? All right. Last one. Last question of the evening. No pressure.
Fantastic. How important is unstructured data processing in LP for research automation or any other type of use cases? Is that something that you guys do yourself a good amount?
It's something we do ourselves. I think it's one of those areas where data structuring, even data ingestion and onboarding data sets is something that us and most firms are looking at. How do we outsource that to another company, because we're only so many people, and how much time do we spend on one data set? So the more structured it is and the easier it is to consume, the more we can do work that's really going to benefit the firm, versus doing that work, then the data may not be valuable in the long run.
Right, on this note, thank you so much. This was terrific. Really appreciate it.
Thank you. Appreciate it.